Chalo, let's go. So, ladies and gentlemen, today I am going to introduce you to a document that one of the largest VC firms in the world sent to all its founders. The document is called Adapting to Endure, right? It sounds like a buzzword or set of buzzwords, but most people in the industry, this is not limited to Sequoia alone. अगर आप Twitter पे हो, so you have been learning or seeing the fact that startups are not able to raise money anymore. Especially growth stage startups are not able to raise money anymore. There are reasons for it, and today we will dive into the reasons. I have only skimmed through the document, now we will get to deep dive it with each other. See, I am going to tell you the perspective I have about this as a founder. As a founder, I'm going to tell you which of these things apply to me, which don't. Most of it applies to me, but I'm going to tell you how I am thinking about it. Do I want to lay off employees? How do I think about profitability? You're going to see all of it in today's video. Ready? Let's go. I'm just going to switch to the, yes. Okay, awesome. Hopefully you guys can see my screen. If you can't see something because my head is cutting it off, please tell me in the chat. Awesome. This is called Adapting to Endure. Okay. Some of the parts of this deck have some image issues. That's okay. Let's just ignore it. The first thing is about why we're here. Okay. And this, I'm just going to read it out to you very quickly. I'm not going to go through every point. Maybe you can't read it. Let me zoom in. I want to take you back to early 2000 when I was CFO at PayPal. It was March 2000. We had closed 100 million at a 500 million valuation. A month later, the Nasdaq, which is the US stock market, experienced a sharp decline. It bounced back a little in mid-year and then sank dramatically by year-end. Okay? Michael Moritz quickly provided the Sequoia perspective. Recognize the moment, expand runway, become a business. Ye kya hai? Become a business. People keep talking about business like, it's some hard to understand concept. Business to bas danda hai. But a VC perspective of how a company evolves is very different from the perspective that the average person on the street would have. A VC is investing in products. They're investing in a business, but they start off, or they know that a business starts off with a product. So आप पहले एक product बनाते हो. This is usually done by 2-3 hackers, sitting around a computer in a garage. Almost every famous startup story goes like this, right? You're sitting in a garage with 2 of your friends, you're building something cool, you don't know if it's going to be worth something or not. That is when you go out and raise your first round, a pre-seed. Small round, $300,000-$400,000, ताकि you can hire 2-3 extra people, because in the US, each engineer costs you $100,000, right? It's not like India where you can get an engineer, actually even in India today, a good engineer would cost you $100,000, but back then it was hard. So what you do, you put together a 5-6 man team, get your product to the market. The product at this point is still not a business. And I will explain what that means, right? When you start off, let me give you an example of a product. Let me say you are making a vacuum cleaner. आप एक vacuum cleaner बनाते हो, right? And you have a 5-man team to come up with a vacuum cleaner. You have designed it nicely. Now you're taking it to the market. Now, suppose you get 5 sales or 10 sales. Some proof that the market wants what you are giving it. Then you have to build resources and an organization around the product. This is called a business. आप एक VP of sales hire करोगे, then you're going to hire a VP of marketing, then you're going to run performance ads, then you're going to run influencer ads. All of it together is the business. You're going to manage how much money you have, you're going to manage how many people are there in the organization, what their salaries are. So that's what Sequoia wanted its companies to do. आज एक product है, आप experiment कर रहे हो, now become a business. Okay, it is a get real moment for the team. For PayPal, he's talking about his 2000 experience, because 2000 is when the market crashed. Actually, it crashed 1 year before that, but 2000 is when most people believe that the market fully crashed. We had 7 months of runway left. Can you imagine? You raise 100 million, but you just have 7 months of runway left. That means you're burning more than $10 million a month. Now you might think, wow, that's crazy. But it's not crazy, because when you have an organization around it, when you have hundreds of sales reps, when you have hundreds of marketing people, it is hard to know exactly what is going on. As a CEO today, I'll be very honest, I don't know exactly what's going on at the lowest level of the company. I don't know. I don't sit in every sales call anymore. I have 4 people who do that, right? And I only talk to the VP of sales. He gives me feedback, and I'm like, I change my strategy accordingly, right? But in larger companies, there's even more people, more layers, more levels. CEO has no idea what's going on. CEO is the captain of the ship, but the captain of the ship can't see very far, right? So 7 months of runway, they did two things. First is they ran exercises in operation expenses. Second is they turned product market fit into a business. They knew that people wanted the product, so they converted that into a business. They started charging. So in June 2000, they introduced fees, because usually when you come up with a product, you're discounting it. You're selling it at a very low price, discounted price, to see will people buy it. But to make it a business, you need to charge fees, you need to have surcharge, etc., etc. You need to make sure you become profitable. And they also became gross margin. They checked out the fraud levels on gross margin, because when you're running a payments business, fraud is important. They did stuff on ACH innovation. This is a banking thing. Let's not get into it. Eventually, they reached nearly $250 million in revenue in 2002, profitable and generating cash. Okay, 2 years. Within 2 years, it became profitable, generating cash, market cap of $1 billion, and they got acquired for $1.5 billion. Okay, let me just zoom in for people who aren't able to see this. Okay. Today, PayPal is worth $90 billion, right? Since that market cap of 1 billion, they've grown 90 times, $25 billion in annual revenue, and $4 billion in pre-tax net income. That is crazy, right? So for most people who say, oh, you're an unprofitable business, blah, 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 it's okay to be unprofitable. It's okay to discount until a point. After you get to that point, you have to transform from a product into a real business. That is what PayPal did. And today, as you can see, PayPal is an awesome business. Sequoia says this: given the market tumult of the last week and the ongoing macroeconomic pressures, and we'll get into what these are, we felt it would be valuable to bring our community of founders together to share insight of what is happening and why. This is not a time to panic. It is a time to pause and reassess. Great start to a note. Here's what they're going to cover. Why we are here. What is the macro environment? Why is it seeming like tech stocks are crashing? What does history tell us? Because this is not the first time this has happened. This happened many times before. Leading from the front, and what is next. Also, how to emerge stronger, how to build a good business across this. Okay. The Sequoia perspective is rooted in our ability to connect experiences and information across our business lines. They've obviously invested in many different businesses, early stage, late stage, growth stage, and they're going to break it down. They have their entire teams doing it. Let's not get into this. Okay. Regardless, we believe this is a crucible moment, one that will present challenges and opportunities for many of you. Crucible moment means a defining moment. Either you will live or you will die. And what matters is how much money you are making and how many months of runway you have. For those that do not know, runway is the number of months you have left to live as a business. And believe it or not, for most businesses, runway is just 6 to 10 months right now. They always believe that every 6 months we will go out and raise money. The problem with that is that you might die in 6 months. And now is a time where a lot of businesses that just have 10 months of runway will actually die. So that's why I'm saying this is a time that there are going to be challenges and opportunities. You have to shift your mindset instead of having regret about this and saying, I was caught unawares. Okay? It will be a longer recovery. And while we can't predict how long, we can advise you on ways to prepare and get through the other side. Okay? This is a little bit broken. Anyway, so the main reason for this, according to Sequoia, is massive monetary stimulus. See, I think somewhere along the lines, US just remembered the thing that a 5th standard student would tell his friends, right? If we have a money problem, why not just print money? And that's exactly what US did. They printed so much money. It's like Joe Biden was just like, oh, problem, let's print money. Oh, problem, let's print money. They printed so much money that you create lots of inflation. Because when everyone has the same amount of money, when you give everyone $1,000 extra, people, the amount of goods being produced are not going to suddenly increase, right? So just because everyone in the world has 1,000 rupees extra, you're not going to start producing more vacuum cleaners. That's not going to help you. But more people can afford your vacuum cleaners, right? And because of that, you will raise prices because demand is higher. When demand is higher, almost everyone raises prices because they have the leverage, right? So what started happening is prices of everything is increased. If bread used to cost 20 rupees, bread now costs 25 rupees, right? So inflation sets in, and I don't want to go into how inflation works, but the point is when you start printing money, you get into trouble. Okay, and it's not just printing money, right? The war in Ukraine, supply chain complexities, because how do you get oil from Russia back when they're going through all this trouble, and many more things, right? So let's not dive into inflation. Most of you know what inflation is. But what the Fed does to control inflation is they turn off the tap, right? They start, till now, stock markets looked attractive to everyone, including the VC funds, right? Agar मैं company में invest करूँ and they IPO 6 months later, that's a win for me. Stock markets are great, everyone's going to go invest in the stock market. But the minute the Fed starts tightening the tap and they start saying, you know, leave stock market, start investing in fixed deposits. So this advice of fixed deposits are bad, stock markets are great. I don't think that's a universal advice. That is great in a bull market. In a bear market, the Fed actually asks you to go invest in fixed deposits, government-backed bonds, right? Because they want you to be associated with them, which means stock markets crash. This is the way to control inflation, by the way. Okay? Okay, there was a Fed mandated, there was a Fed mandate, they pivoted to tighter money. We don't need to go into what this is. Okay, so what does that mean for startups? That meant that capital was free, which means that people were throwing money at the stock market and one level below the stock market, which is private companies. So somebody would come, they'd see a company like Tiger would come, Tiger Global, most of you have heard of this, very big VC in India. They would come and they'd start throwing money at random companies. They'd be like, tu acha hai le le. Because they know you will IPO 2 years later and give them a 3x return. But the problem is, and that's what they call free capital, right? But the problem is, the minute Tiger knows that if you IPO, you're not going to make me so much money, why would I invest in you at your Series C, Series D? For those that don't know, a company will first do a pre-seed, then they will do a seed, then they will do a Series A, then they will do a Series B, Series C, and Series D, and so on. At every stage, they prove more and more of the business. They prove that either I'm able to get repeatable users, or I'm able to get make revenue repeatably, etc., etc. And Tiger just bets on one of those. The company goes IPO, and then Tiger gets X amount of return. That's what they meant by capital is free. And the best performing companies were capital consumptive. If you are winning, if you have a great product, अगर आप world class world class vacuum cleaner बनाए, then what do you want to do? What should you do next? You should go out and market the shit out of it. You should go out, make noise, blow trumpets, clap, whatever, to get attention to the vacuum cleaner. Because all you need is to build a great product that people want and sell that product to people. How do you sell product to people? You have to get their attention. You do influencer marketing. You go, give money to Ankur Warikoo and you say, hey, can you make a video about my vacuum cleaner, right? So that's how you do it. And that's why these are capital consumptive. That all this marketing activity requires you to spend lots of money, okay? But now capital has gotten expensive because Tiger is not seeing the returns that it used to see. So these have become the worst performing companies because you have such a high burn rate. You're spending $10 million a month and nobody wants to put in money in you. With 6 months of runway, you are absolutely going to die unless you fire people, right? So given every dollar is more precious than it was, how are you going to change your priorities? Okay. As this was digested by markets, the best performing assets when rate expectations were following, including technology, biotechnology, recent IPOs, have been the worst performing assets. Okay, and I'll show you in graphs how this looks. Okay, we are now beginning to see how the increasing cost of money, inflation, flows through to impact the real economy. To give you one example in the housing sector, in the last 6 months, due to the changing cost of money, a new mortgage is 67% more expensive for the same house, the largest percentage shock in 50 years. Let's keep going. Let's not go into the complexities of this, right? I'll digest it for you. We are experiencing the third largest NASDAQ drawdown in 20 years. Minus 28%. Right? This is not a joke. This is huge. A lot of people have lost 30% of the money. And there's some people with positions of $1 billion on the markets. And today they're standing at 700 million. They've lost 300 million out of thin air. Just because people's sentiment and things are getting expensive. This is how everything impacts everything. If you have a recession, it impacts tech stocks, obviously. If you have inflation, it impacts tech stocks. We are experiencing the third largest NASDAQ drawdown in 20 years. It's been an incredibly volatile last 6 months in the tech market. If you have questions around this, please go ask Paytm. They launched at a price of X. Now they're trading much, much, much lower than that X. And not just them, right? All the tech stocks are seeing this shock. While it's not quite 2001 or 2008, these were two very big financial crashes. The NASDAQ is down 28% since November, and most of these people believe it's going to get worse, right? Which means everything gets harder, okay? 61% of all software, internet, and fintech companies are trading below pre-pandemic 2020 prices. Tell you what that means, okay? 1 in every 2, more than 1 in every 2. You throw a stone at a company, very high chance that they are trading much lower than their pre-pandemic 2020 prices. Right? This is bad because obviously it reduces excitement in investing there. Agar aapko pata hai, and I'll tell you, I'm now going to step into your shoes, okay? If you want to invest in a crypto, but you know all cryptos are down 90%. Instead of you saying buy the dip, and you might say buy the dip because you don't have a big position. But if you had huge position in Bitcoin, huge position in Ethereum, would you sell? Or would you buy more, of Solana or something new? You wouldn't, right? Because you'd be like, let's wait and watch. This looks like a spiral. Sometimes you can't tell if it's a dip and it's going to come back or if it's like a straight downward spiral. That's what VCs are a little bit worried about. Okay. Let's keep going. 1/3 are trading below COVID lows when uncertainty and fear was peaking. Let me show you something, okay? Let me show you the Zoom stock price. Look at this crash. Right? They had a huge crash. Let me go to 6 months. Look at this. Before the pandemic or during the pandemic, Zoom was considered one of the best companies, right? Because everyone needed to use Zoom, obviously. But just see how Zoom has gone down. It's just people don't need Zoom as much. Their activity is less. Their revenue is obviously going to become less. Everyone thought, and VCs, again, for all the intelligence that we think VCs have, they are also surface level thinkers. Right? You ask VC to go 1 level deep, they know everything. You ask VC to go 2 level deep, they're sitting ducks. They don't know what's going on. Right? So something like a Zoom, which was considered, because everyone thought pandemic is going to last 10 years. Everyone was saying, oh, we're going to have this hybrid remote work and normal work system. Not happening. Right? And Zoom is one of the companies to suffer through this. Right? And there is a lesson for us. I don't want to make this a boring, dry finance session, right? There is a lesson for this, and I'm trying to get to the lesson. So let's move through all this. Growth at all costs is no longer being rewarded. Okay, because there was a time in VC land, and VC stands for venture capital. Growth at all costs was being rewarded. If you're growing users 10% every month, le paisa le, holla macha. Right? Go and make noise, as much noise as you can, get more users, make more money, right? Do it all. But you look at this, revenue multiples of companies, and there's something called a revenue multiple of company, right? A company always trades at 10 to 12x of what they're worth. So if you are making $1 million in revenue, your real value on the market will be maybe $12 million. Actually, this applies only to companies that are $10 million and above. So if you're doing $10 million of revenue, then your multiple would be, let's say 10x, you'd be trading at $100 million on the stock market. But now, you're trading at 5.8x. It's gone from 12x to 5.8x in like such a short period of time. The last time we saw this was so many years ago, 10 years ago, right? It's crazy. So it's not a good place to be. When you know if you're making 1 million, now your company is only worth $6 million or $5.8 million. Earlier it was $12 million. That's a big difference. Big difference, right? In fact, it's like, because this happened, my net worth, in the net worth that I have in Avalon, and the value of Avalon as a company, that would also be slashed by half. Right? It's almost like a drawdown. We didn't do anything wrong. We're in fact growing, we're making money, but because the market sees all tech stocks poorly, my net worth would have been slashed by half. Right? That's the crazy part about this, right? You can do absolutely everything perfectly, but you could still crash. Market is very sentiment driven rather than based on any unit economics, but things like inflation, which are real, things like the increasing cost of goods, which are real, impact things, right? So growth at all costs is no longer being rewarded. The era of being rewarded for hypergrowth at any cost is quickly coming to an end. Revenue multiples across software have been cut in half over the last 6 months and now trade below the 10-year average. That's crazy. Growth adjusted multiples have fallen even further and are well below the 10-year average and pushing the 10-year lows. 10 years we've had a bull run. Tech is now seeing a 10-year, we don't know how long the bear run is going to last, but it's going to be a bear run essentially. Okay? Focus is shifting to companies with profitability. Finally, I always believed in grow at all costs. It's important to grow at all costs, right? Because if you don't grow, somebody else is going to grow. But last year was just a joke. Last year was like people throwing money at anything with video conferencing in it. Because of the pandemic, people are throwing money at it. Obviously, right? Like you can't have businesses that, like we were doing this with Avalon scenes, right? When we were consumer social, a lot of people asked us, consumer social, we had about, so little bit history about Avalon scenes. Today we're a community app. We help businesses run their communities. We give them infrastructure for them to run their communities. But in the past, we used to have an app where anyone could come and run their communities. We were growing fast. We had 150,000 users. We had 2,200 free communities, but we were not making money, right? And the goal was grow, 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 grow. One day you will figure out how to make money, which is true, right? It's happened for businesses like Facebook. But the problem is, if all investors in the world at the same time think, fuck the companies that are not making money, Avalon would have died. That is why in 2022 early, and obviously we knew this, and even the investors knew this far before Sequoia put out this, right? Because Sequoia thought it's like a minor dip, but it turns out to be a longer dip. Because we understood this, we said, okay, let's put a price tag on it. Let's just put a price tag on scenes and sell to people who have money, right? So focus is shifting from to companies with profitability, and anyone else who is standing outside this is going to be caught, duck out, right? And we'll show you what that looks like. The focus on near-term momentum is often shifting towards companies who can demonstrate current profitability. This is also a problem with how VCs work. We think that the way VCs work is that they invest in companies that can become massive companies, that can become billion-dollar companies. That's actually not entirely true. That's important, yes, but more importantly, a VC, when they invest in a company, they're momentum investors. That means they don't exactly know what the company does, right? Even my investors, I would bet, if I had to bet, I have 40 investors, maybe more than that. I would bet like half of them don't exactly know what Avalon does, or don't exactly know what Scenes does. They've invested because they had spare capital. They've not just invested in us, they've invested in like 30 companies, right? But why do they invest? They invest because momentum. When you're growing fast, you don't want to miss out. It's like many of you would invest in Dogecoin without even knowing what the fundamentals are, because you see that graph going like this. You're like, I don't want to miss out. It's like FOMO. It's FOMO driven. You might think smart VCs investing millions of dollars are not going to invest through FOMO. They absolutely do. It's momentum investing. That's the only way VCs invest, and that's actually a good way to invest, because if a company is growing fast, chances are it's going to grow faster. And for a VC, you invest in 10 companies like those, 9 will fail. The one that succeeds is going to make you so much money that it doesn't matter that the other 9 have failed. Awesome. The market is signaling a strong preference for companies who can generate cash today. Okay? Cheap capital is not going to come to the rescue. We've already gone through this. You cannot just raise money from anywhere. We're not even going to go here. This is boring. Durable growth while improving profitability is always the path. Try to be a profitable company even if it takes longer, right? It's not just valuation, but real economy risk with a weakening consumer. The average consumer is weaning itself off stimulus. Stimulus means US has given everyone extra money. The consumer is kind of trying to get off that money, or has almost gotten off that money. Everything is more expensive, right? And that shock of everything being expensive, you can't print money. This is economics 101. I don't know why the US did it, but they just went and printed money. They just like, took out an HP printer and just started saying, okay, we'll just print more money and that's going to solve our problems. It's just going to delay problems to later. But over the medium and long term, disciplined, durable growth is always rewarded and translates into meaningful value appreciation. We learned this in 2022, Jan 2022. That's when we became a B2B company. Even though we had options to stay B2C or B2B, we went B2B because we were like, this is going to make us money. Right? When people look at us, they're like, oh, you said you're going to build the next Facebook. You still build a good business, but it's B2B. B2B is boring. I'm like, it's boring, but it makes us cash. I can durably grow this over the next, God knows, 5-10 years. Whereas in B2C, the risk of failure, the risk of success is 1%. For me to go out and say I'm building the next Facebook, 1%. But you look at CRMs, customer relationship management tools in B2B, there are 100 customer relationship management tools. All of them are successful. All of them have slight differentiation. But it's not the same with B2C. Once Facebook came, MySpace died. Once Instagram came, Facebook died. Once TikTok came, Instagram's dying. Right? Only one can survive at the same time. In fact, in any consumer, you'll find usually 2 successful companies. Think about it. Okay, let's do an exercise. Let's talk about food tech. In food, name 2 large companies. Swiggy, Zomato. Okay, now name the third. Name the third. Uber Eats got sold. Tapzo's dead. Tiny Owl's dead. Food Panda, they are dead. Like, I think they're dead or they got acquired, one of the two. Next segment, talk about EdTech. Name the two largest EdTech companies. Byju's, Unacademy. What about the rest? Right? Talk about skilling. Upgrad and what's the other one? There's one more. I think Jigsaw. Right? So in every space, you'll find two big winners. Two big winners in consumer. But in software, in B2B, you can have 30 winners. You can have 50 winners. Any differentiation is okay. Even if you say, okay, I will build something custom for you, that's a differentiation. If you say, okay, I allow customization, you don't allow customization, it's okay. But in consumer, it's always two. It's always two. Awesome. What history tells us? Let's go through history. Okay, so they have lived through 2000 and 2008 crisis. In the past 2 years, the pandemic forced the government to stimulate. Print and throw money. The war has impacted gas prices, obviously. The gas prices are really, really important for exports, right? If exports slow down, then people don't have money because their exports are not coming. If they don't have money, they're not going to buy shit. They're not going to buy shit. Whatever you're selling on your app is not going to work, right? Because they don't have the money. The only way to stop inflation is to stop purchasing. With less money to buy, it shrinks the economy, which is what the government is trying to do, by the way, actively. And recovery will be long. Recovery will actually be long. It will take a very long time for this to happen. Okay? It won't be quick. Sequoia does not think this recovery will happen tomorrow, which means they are saying that this is going to be a tech recession, and this is Sequoia, right? Then they're not going to like come out one day and be like recession and then it doesn't happen tomorrow. They actually believe in it. They would have thought this through, otherwise they would have said this in January. So the question of who survives? Who survives? Okay? I don't know why this is some graphical issue. Adaptability. It is not the strongest of the species that survive, nor the most intelligent, but the one most responsive to change. Darwinian. This is Charles Darwin in a nutshell, right? People think that it's the strongest of the species that survive. It's not. It's not the intelligent as well, but the most responsive to change. If it starts raining, you should be able to build a shelter. If it's sunny, you should be able to build a hat, right? You need to adapt as the situation changes. You cannot be static. So, and this is where I'm going to come into the part that I both like as well as dislike. Survival of the quickest. Now let's say there are two companies, okay? Company A and Company B. One is green in color, Company B, and Company A is blue in color, okay? Sorry, orange in color. So Company A is spending money. They spend too much money, okay? And then they don't have money anymore. 7 months of runway, 7 months goes over, and then wham, they're dead. This is called the death spiral, where you just cannot raise money, nobody is willing to invest in you, and you are going to die effectively. You can't do anything about it. Whereas Company 2 says, oh shit, there's going to be a crash, let's hit the brakes, let's fire 600 people. So what happens? You've seen all these layoffs, right? You've seen the Unacademy layoff, you saw the I don't know, so many companies that have done layoffs, right? I don't even want to go into it. The minute a layoff happens and you let go of 600 people, let's say each person cost you 1 lakh. The 600 lakhs per month you saved, okay? Suddenly your burn rate goes down. Whoop, goes down. And then you have longer to live. Slowly you can increase your burn rate again. That's why layoffs happen. It's not that the company necessarily is doing badly. It's the fact that company is like trying to avoid something called the death spiral. That's why everyone's firing people. They're trying to do it in the nicest way possible, but they are firing people. Avalon is one of the only companies that is not firing people. Why? Because we are profitable. That's number one. B, and we have not even fired one person. Actually, we fired one person, but for non-performance, not because of, because of this. Not even one person, because we are profitable. We have a lean team, and I always believe that small lean teams are the ones that build the greatest products. And our consumer base in the US. US can spend far more than India. There is this thing, okay, which I really dislike in India. Every VC will push you to build a consumer Indian company because it's exciting, right? The average VC partner in India, a person that can write check in a VC, that can actually sign a term sheet, the average VC has a net worth of 100 million plus. $100 million plus. Because obviously when Flipkart goes IPO at $16 billion, if you own 20% of it, and it's a lot of money, right? Obviously, you have to give some of that money to the LP, the people who put money in your fund, but let's not go into that, right? The thing is, for them to build another B2B SaaS business is boring. It's not fun. But consumer, next Facebook, exciting. I want to be part of the journey. Because it's not just about money for them. It's about status. When you did Flipkart, when Axel did Flipkart, Axel's a VC, when they did Flipkart, they felt good about it. And they're like, we are backing one of the first few e-commerce companies in India. We're going to take this to the finish line. And when it went to the finish line, when it sold to Walmart at $16 billion, they felt really good about it. Status plays a bigger part. Like all of you guys think it's money, and we had this conversation about Sandeep Maheshwari as well, right? Like I had the previous video about him. Everyone's like, oh, he doesn't monetize. Dude, after you make a few million, the next goal for you is status. Why do you think Avalon today, that's worth, God knows, 200 crores? Why do you think we are trying to play to be a 20,000 crore company? Do you think the extra money matters to me? Do you think the extra money matters to my co-founders? To some of my investors, yes. But to most of the investors, they want to be part of an exciting journey. And it's a nice thing to say, right? Oh, my company is $1 billion company. They're playing for that status. It's not for money anymore. Most of them, entrepreneurs that I've met, lots of people who are billionaires on my cap table, who have invested in us. Sujit from Udaan, Kalyan Krishnamurthy from Flipkart. He's the CEO of Flipkart right now. They've all invested in my company, right? But for them, this is about the excitement. It is less about making money. That's a side effect. And you should stay away from investors who invest just to make money. Okay. Avoid the debt spiral, do layoffs. Okay. Companies who move the quickest have the most runway and are most likely to avoid the debt spiral. Do the cut exercise. Projects, research and development, marketing, other crap expenses, stop it. Stop anything that is not critical to the main cash flow generating part of the business. Because every business has a cash flow generating part, that's the immediate future, and then they have a longer future. They have a longer future, which is, what do we do 3 years down the line, 5 years down the line. Okay? It doesn't mean you have to pull the trigger, but that you are ready to do it in the next 30 days if needed. In 2008, all companies that cut, every single company that cut were efficient and better. Don't view a cut as negative, but as a way to conserve cash and run faster. Even though to the media and the public, it seems like, oh, these people laid off 600 people, so sad for the people. If they were good people, in any market, good market, bad market, if you are good talent, if you're a great developer, if you're a great marketing person, if you're a great salesperson, whichever, if you're a good talent, you will always get a job. That company might be trying to avoid the debt spiral, because the last thing you want is to not fire 600 people and then have to fire 6,000 people 2 weeks later or 2 months later, then fire 600 people and keep the jobs of 5,400. It's a balancing thing, right? Either you drop all 6,000 people, like fast.com did when they crashed, or you try to balance it. I'll let little few people go so that these people can survive. It's like there's a boat, lot of people on the boat or ship, and ship is starting to sink because it's so heavy. So you throw some people out. It sucks, but if you're a good swimmer in any market, you will get to the next ship. They will always do well going to the next ship. Luckily for Avalon, we knew all of this was coming way before. In 2022 Jan, we had some inkling that this was coming. We had a great finance guy in Shashank. Shashank was like, bro, we need to tighten our ship. Right? So we made the necessary changes. Companies that make the changes here are, in a little bit of trouble. My problem or my worry is that VCs, right, are like a car. They're like a Mercedes car. You sit inside the car, founders are the driver. Okay, now you can drive the car in two ways. You can drive the car slowly and slowly go from 30 kilometers an hour to 50 kilometers an hour to 80 kilometers an hour, slowly brake, slowly go. You can do that. Or you can slam the accelerator, go to 100 kilometers an hour, and then suddenly hit the brakes, and then suddenly accelerate again when the market gets better, suddenly hit the brake when the market gets worse. Who gets affected? The founder will have airbags. And airbags because at every round the founder can usually convert some of his stock into cash. Especially if you're a mature company, you can do that. You can keep taking a few $1 million out in real cash, convert stock into cash. Who gets affected? It's the passengers at the back. Their heads are always going to the seat and coming back and going to the seat and coming back. So I feel that it's not fair for them to put that on the passengers. But as passengers, here's my advice, right? Unless it's a company that is profitable, you jump ship. I'm serious, you jump ship. Unless you're super critical to a company. In fact, have that conversation. If you are an employee and you're working in a startup and how much ever the money the startup has raised, you have to go and ask your CEO, will I live? If the answer is yes, then great. If the answer is no, move. Don't wait for that mass, firing to happen. Cool. Next is about choices. What decisions do you plan to make versus what decisions do you wish you had made? Okay. When you have just 6 months of cash left, focus becomes incredible. In every company, the CEOs are artists. They have a little bit of art in them. तो उनको करना है 3 projects करना है 4 projects करना है ये भी करूँगा वो भी करूँगा वो भी करूँ. I'm guilty of this, by the way, in my previous companies. Right, I've done 3 things at the same time, 4 things at the same time. But when you have 6 months of cash left, and the reason is when you're profitable, you don't have this issue. In fact, that's the problem with profitability, right? Like, you're going to survive forever, so you'll be like, let's start the next project because you'll survive forever. As long as it doesn't take too many resources, it's great. But when you have 6 months of cash left, focus becomes incredible. You can do one thing, you have to do what makes money. And believe it or not, it's so obvious that you have to make money, but when you get in the driver's seat and you have 5 million in the bank and some good investor is invested in you and you feel awesome about it, it's easy to get misled and start doing 30 things, unrelated things, right? But focus is important and you get it back and you just work towards the money, okay? You cannot overtake 15 cars in sunny weather, but you can when it's raining. There is an opportunity when the market has crashed, when it's like this, which means everyone that's here, let me go back up, every company that's here can be destroyed by companies that are here. If you can cut, make sure you live forever, make sure you're profitable, like what Avalon's done, you can destroy the companies that are 10 times bigger than you and spending 10 times more money than you. It's just a thing, right? This is the opportunity that Sequoia talks about. So, who wins? The founders, CEOs who face reality, adapt fast, understand that venture capital is not going to save you. If you have 6 months of runway, you have to be profitable in those 6 months. No time for, wasting time. Have discipline rather than regret, and recognize that it is easier to preserve cash when you have more than 6 months of runway left. Recruiting is easier because, I'll tell you, this is a crazy thing, right? This is going to happen. All engineer salaries are going to drop by exactly the same thing that the mortgage thing, like 67% plus, right? In fact, they're going to drop as much as the stock market has dropped. In fact, more, because when the stock market drops, every VC starts closing their purse. So the developer salary, the average developer in India is now, if you have like 3-4 years of experience, is maybe like 30-40 lakhs an annum. I can guarantee you that it'll go back to 20 lakhs an annum. If there's no cash in the ecosystem, who's going to pay you that much? Earlier you used to get 3 offer letters so you could auction yourself. If you're getting just 1 offer letter, you can't auction. Take it or leave it. Right? You might get kicked out of your job. In fact, the people that are expensive are getting kicked out of their job. Just a thing. Like, a company looks at the top 10 most expensive things because that's the easiest way to cut burn. Because see, you could have 30 people in sales, each costing you 50,000, or you could have one guy costing you 1.5 crores. It can happen, right? Who do you fire if you had the choice? Sales brings you immediate money. If your product's already done, why do you need one guy who's like super duper expensive, right? And I'm sure most of these companies have multiple people. You still need leaders, right? But you can get rid of anyone who you think is unnecessarily paid. So you'll have a bell curve. If you're not at the top of the bell curve, your job is gone, right? And it's going to get cheaper to hire new devs, because once you go back on the market and you think you were worth 60 lakhs, the best the market's offering is 25, you are going to feel depression. You're going to feel like your net worth or your salary or your value is gone down. But that's not true. Like I said, somebody else is driving the car, somebody else is hitting the brakes. You're the one whose like head is hitting the seat at the back. You have to recognize that, right? Awesome. All the FANG companies now have hiring freezes. They can't hire. Okay. How to emerge stronger? What do you do at this crucible moment? Either you can go up or you can death spiral. What do you do? It's hard to predict the future, but whatever happens, we want to give you a framework to emerge from any crucible moment stronger. You know the decisions that you make will be pretty consequential, and you might be in for a fight, right? Obviously, companies that don't raise money are fighting every day. Finally, these guys get to fight. That would be interesting. Who wins? The dog that's on a leash from venture capital, or the wolf that's been out hunting in the jungle by itself? Now that's awkward for me to say because I have raised venture capital, but we think more like a bootstrap company because I come from a bootstrap mindset, right? Chance only favors the prepared mind. At Sequoia, we believe that the one who wins is the most prepared. Okay? If the one with all the money is the one that wins, how could Zappos go up against Amazon and win the shoe category? How could DoorDash come from behind and emerge as the market leader beating Uber Eats? How do businesses like Clubhouse die? The one who is best prepared for the fight. Clubhouse was not prepared for the fight of random Indians coming and having sex chat on their app, which is what happened, by the way. They were not prepared. So if you're prepared, you win. Which means to be prepared, you have to grow slower. You have to have enough time to figure out what you want to do. Is it going to work at scale, etc. Okay, so how do you prepare? Prepare your mind, prepare your team, and prepare your company. Okay? First thing, you have to prepare yourself, your team, and your company. So let's start with preparing your mind. First step is the hardest. Every crash starts with the founders not confronting reality. नहीं, market crash हुआ, but हम raise करेंगे. हम super में हम raise करेंगे. That's true. If you're a great company, no matter whether it's a good market or bad market, you'll raise money. But most founders today, or most businesses in India today, even the unicorns, are crap companies. Right? Think about Paytm Mall, okay? Paytm Mall was a unicorn. Sale price. Paytm Mall exit value, sorry. 13 million they sold for. And they had a valuation of 3 billion. Do you guys know what percentage? Let's do that. 13 million divided by 3 billion into 100. I don't know if this will give the math. 0.4%. Wow, that's really low. I don't know if I'm calculating it correctly. Anyway, the point is it's a very small percentage, right? As the founder, as the CEO, you have to confront reality. There's only so much that your team or your board will push back. Okay? There's probably no better illustration of the first 3 bullet points here than a gentleman called Admiral James Stockdale. Very interesting story. Very interesting story. It's called the Stockdale paradox. Okay? He was the highest ranking US military officer, held as a person of war during the Vietnam War from 1965 to 1973. He was tortured over and over again, but he made it out of there while many didn't. When you ask him why he didn't make it out, he retorts, the blind optimist, they were the ones who said, we are going to be out by Christmas. Ye torture ho raha hai, but 6 months will be out. Christmas would come and then Christmas would go. Then they'd say, no, we're going to be out by Easter. 12 months ho gaya, they're like, another 6 months, they're going to let us out. How long can they torture us? And Easter would come and Easter would go. Then Thanksgiving, and then it would be Christmas again. And they died of a broken heart. Sometimes you die when you lose steam. When, like Naval put out this tweet, right? Companies die when the founder loses motivation. When the founder runs out of steam. Not when, because of the market or this or that. Okay? He would go on to tell many of his prisoners, we are not getting out by Christmas, deal with it. If you confront reality, and if you say, this is what the market is, then you confront it. I know a lot of kids who go out and say that, मुझे investment चाहिए, फिर मैं business run करूँगा. I tell them, today it's impossible. Maybe last year you had a chance on an idea to raise money, but now please go with a product, and please go with some consumers. Please go with some sales. Okay? You have to prevent yourself from spinning into a negative cycle. In 1998, I was CFO of Link Exchange, and we were attempting to take the company public. But on 8/31/1998, the market dropped 100 points an hour. Okay, there was a Russian ruble crisis, so they had to stop an IPO. Without the IPO, they were going to run out of cash. I was working so hard; the crash wasn't their fault. I started to feel bad for myself, and it went dark fast, which was preventing me from solving the problem at hand. Hard to snap out to get out of the predicament. Okay, now this is Sequoia pulling a Sandeep Maheshwari, where they're doing courage over fear. Courage is a decision, so choose courage. This is what I don't like VCs for a little bit, right? Obviously, I understand them wanting to motivate their founders and stuff like that. But when you're the one that has been throwing petrol in the car and pushing it, and now you're asking your founders to brake, and passengers in the back are hitting their head, and you're the one telling the founders to brake. It's like, you're standing in front of the car and putting like a red light sign, but also saying these things like courage is a decision, choose courage. I find that a little bit annoying. We will prevail. Okay? Again, motivational. Crisis leads to opportunity. So this is true though, right? If other people are suffering, if other companies are struggling and they're dealing with burn rate, I can race past those companies because I don't have those challenges right now, right? As long as we're profitable, we don't have those challenges. We have plenty of runway. Anyway, yeah, with the change point, the strong can become weak and the weak can become strong. The once coveted growth stocks are being dumped, and the value stocks are stocks with real profits, are being coveted, right? Most unicorns in India last year, we celebrated all of them. Most of them are not making money, right? Or are wildly unprofitable. The change point is what allows for the opportunity. If you see the opportunity clearly and are prepared to seize the moment. Okay? Prepare your team. This is harder because as a founder, it's my job to kind of take the emotional lows. Right? It's my job. It sucks, it's hard, and that's why, you know, the motivation kind of helps. But I also realize that motivation is surface level. Right? What really helps being prepared and being able to tell your team, because your team is what really matters, right? How do you navigate the ship? You're standing in front of the ship, you can see a cliff, you can see a rock in front of you, and you know you're going to crash into the rock. Titanic. How do you turn back and tell your team to navigate without them panicking? Okay? So, there are two kinds of people in a company, and I've noticed this to be true. One is called the mercenaries, the other one is called the missionaries. Mercenaries are people who are like, you know, Deadpool. You can hire them for like $30 an hour, they'll come shoot for you, and then they're gone. Next, they'll go to the next company and shoot for them. A missionary is somebody who truly believes in the mission, right? It's like missionary, the word missionary comes from the religious people in Christianity who would go to different lands and tell them the value of, you know, Christ, right? So with companies, you need people like that who truly believe in the mission and are willing to tell the story and the mission and the vision of the company even when you are not there as a founder, who really believe in that. The mercenaries are the first to decamp. Anyone offers them more, they will leave because they're hired guns. Okay, when we couldn't go public at Link Exchange, the mercenaries were the first to leave, and that happened at Airbnb and DoorDash. After 9/11, sales went to zero at Zappos, and the mercenaries fled to larger companies like such as Amazon. This happens again and again. As long as you keep the core team together, and I've learned this the hard way, by the way. You can have 50 employees, but the core team is going to be like 6-7 people. If you can keep the core team together, and they believe, and you're fully transparent with them about how much money you're making, you know, how much runway you have, whether there is a rock in the way or not, they find it easier to trust you, and they also, you know, they feel like steering the ship together with you, right? It's something that it's your job as a leader, okay? And you also need to know your audience. You need to know what each person wants, okay? They need to continuously be reminded of why they joined your vision of the future, whatever you believe in. And Avalon believes in the idea that everyone's going to own their own community at one point. Right? At some point. Might not be today, it might be 6 months later, it might be 3 years later, it might be 10 years later. That's our long-term mission. Okay? They're all looking to you for direction. As a leader, it kind of becomes your responsibility, right? Like, I have 40 investors, 20-something employees, lots of customers, an audience. It's my responsibility to tell everyone what's happening. Keep them all aware, right? And, you know, no better than, you know, kind of just running through this memo directly. Align your team, ask for commitment. Sometimes it's much better to go to a team member and say, hey, this is going to happen. I need your help. Okay? If you're in this, great. Or leave. Lighten the lifeboat or leave. Right? If you feel like you don't want to go through those hard times, you can leave. And chances are it's hard for you to find a job anywhere at this point because the crash that's happening. All tech stocks are like hitting the floor. Alright, so we'll end this very quickly. Finally, it's cash and cash flow. Okay? You have to make sure that you have to make more money. So this is exactly like us. We pivoted, or rather we started charging a price for running a community. Earlier we never charged a price, it was free, but we, like Airbnb pivoted to long-term stays, we pivoted to adding a price tag to communities. That helped us, that's easily going to help us survive this. Okay, improve unit economics. Okay, obviously best is earn more, good is improve unit economics, okay is like cut extra burn. Okay, and finally, if necessary, raise as much money as you can, even if it's expensive. Last year, you could raise 5 million at a 20 million valuation, or 5 million at 30 million valuation, even if you didn't have anything. This year, I doubt you'd be able to do that. Valuations are going to drop. You need to prove more. You're going to raise less money, but you should do it, right? And ideally, people tell you don't raise debt. Paul Graham keeps saying don't raise debt. Airbnb did a 10% debt deal, right? Even if you don't like the terms, you should do it. DoorDash had 2 very difficult rounds. Zappos, debt and equity deals, they really struggled. concentrate investments in their future, you won't be able to cut your way to a business. This is also true, right? You can't like fire everyone. You can't like say, oh, I'll go back to 3 employees and figure it out. You can't build a business like that. So you can't keep cutting. There's a bottleneck to which you can cut. You can cut to a floor, but don't cut beyond that. Try to build your business. Okay, you still have to focus on the future. Focus on what's working. Most important leverage investments means what is working. Move back from the undisciplined pursuit of more random things. Okay, Airbnb cut everything, most of the product team, but invested more in core hosting and longer term stays. Longer term stays pays Airbnb consistent money, so they focus there. I can guarantee you in India, when this is happening, everyone's going to move B2B. All the consumer companies that were trying to make money here and there, a little bit here and there, are going to pivot to B2B. That's something that I foresee, right? Unless they've already figured out consumer. I feel in consumer, one of the things that will work is gaming. But apart from that, in India, it's like very tough to build like a highly profitable business. Zappos cut marketing but invested in customer service, selection, engineering. Okay, what for Avalon, we have completely gone into product as well as content. And you will never see that content, by the way. This content is fully directed into the US. Go to buildonscenes.com/blog. You'll see all the content pieces there. It's not even targeted towards you. It's targeted towards US. We wrote a book in Jan called Community Masters. We wrote it because we are targeting the US. We don't even care if anyone in India doesn't see it because you guys are not our audience anymore. When we were running a free app, of course, all of you, everyone was an audience. But now we are very specific about who we target, and we don't want to target anyone else. Okay, constraint. So the power of and versus either or thinking. This is a problem with a lot of youngsters that I've seen, right? When you're young, when you're 19, you can be everything. अगर आपको celebrity बनना है तो you can be a celebrity. अगर आपको influencer बनना है, you can be an influencer. अगर आपको founder बनना है, you can be a founder. अगर आपको skydiver बनना है, you can be a skydiver. अगर आपको travel blogger बनना है, you can be a travel blogger. अगर आपको scientist बनना है, you can be a scientist. You can be everything. The problem as you get older is that you have to choose one. And you'll realize that consistency matters. If you want to be a doctor, they will not trust you if you've only been a doctor for 1 year. You need to have done it for many years. Plus, you learn more about it. If you want to be a founder, investors want to see you in the ecosystem for decades. Right? If you want to, you have to choose one because your reputation matters on one of these things. So you have to choose one, even if it means closing your eyes to other very juicy, very lucrative opportunities. Right? So when you recognize your constraints, when you know that I need to be successful in 2 years. When you give yourself a timer, even though people say don't give yourself a timer, when you have a personal runway, 6 months, college is done, I have to figure it out in the next 6 months. You can focus more on coming up with a better solution that makes you money rather than throwing money at the problem. Due to lack of funding, Zappos forced to grow with LTV CAC payback on first order, which means they couldn't lose money. That just means till now they were selling at loss, now they're not selling at loss. Created their own gift card program. Okay, created their own store credit program. Extended terms for merchants from net 30 to net 90 days. They said, okay, merchant, we'll give you money a little later. I hope that's okay. So that they could keep more money in liquid cash to work. Right? They did brand marketing programs such as advertisements in the shoe bins for very low prices. Right? That's crazy. Like, I wouldn't do that, but that's crazy. I want to show you Airbnb's board update on April 5th. Okay? Why would Airbnb have a board meeting on Sunday? Well, this was April 5th, 2020. 2020 is when pandemic hit. Airbnb went to zero. Nobody could go out and travel and stay in a place. So their revenue would have probably gone down zero. They went 30% year-on-year growth in January to a flat year-on-year growth in February to down 30% year-on-year growth in March. They were like, down. He knew April would be bad. Brian presented these slides before the board meeting to get alignment. So this is what he said. This is a slide. Once in a generation crisis, make sure Airbnb is around for future generations. That's all Brian. Brian Chesky is the CEO of Airbnb. He's just like, we want to make sure we're here. Survival. This goes from profit banana, ye karna, fuck that. Survival. Okay? So, principles. These are very easy principles. Be decisive, which means make decisions. And you might think, what? Decisions are easy to make, but for us to pivot from B2C to B2B took us 4 months. It's like 4 months of thinking, we're getting users, can we make money? We're getting users, can we make money? To saying, fuck it, let's just focus on making money. Right? You might think it was an easy decision. It was not, because so many people, you have to tell 40 investors, you have to tell your team that, oh, bro, we're doing this. They're all fully supportive, but you have to tell them. And it takes time. 4 months it took us. Realistically, it should have taken us 30 days. Okay, but being decisive is hard. Preserve cash, which means it's quite obvious, right? Avoid the death spiral. Act with everyone in mind. Stakeholders are people who have shares in your company or hold some value of your company. Act with them in your mind. Emerge as role models, not villains. When you fire people, when you lay off people, the media can paint you as a villain. इसने सब लोगों को fire किया. You come across as a horrible person, right? Like, that's what's happening on Twitter right now. They're like, bro, we have to be a role model. We have to be open about this. Not be the villain. Okay, because it's easy to be painted as a villain. Play to win 2021 travel season. Fuck it. We lose 2020, that's fine. Next year, we will win. When everyone's not investing in travel, we will win. Okay, and don't trade in the future, which means don't cut so hard that you have no employees to do what you want to do in the future. Okay, so we need to do 4 things. They need to do 4 things. One is raise money, manage our stakeholders, diversify our business, which means get to more profitable businesses, cut costs. Okay, awesome. That's the Airbnb. Finally, I want to talk about one more thing, which is, let's get to it. Leadership principles. How do you lead? How do you communicate all this? Okay, 4 C's. Communicate with conviction. Conviction means that you have confidence in what you're saying. So it's very easy to tell if you don't have confidence in what you're saying. Okay, so confidence in what you're saying with confidence to the external world and calmness. Okay, no panic. Remain authentic. The minute you start, speaking in PR terms, everyone can tell that you're being inauthentic, except fans of certain person. Balance of optimism and realism. Be optimistic about the future, but realistic about today. Okay. These are some strategies for uncertain times. First is simplicity scales, complexity doesn't. The more complex your business, the harder it is for it to scale. The simpler it is, and this not only applies to the product, it also applies to the business. If you have a very complicated organization chart, simplify it. In marketing, to give you an example, Avalon is doing 5 things. Okay, we're doing advertising, we're doing a little bit of influencer marketing in the US, we're doing a little bit of SEO, we were doing a little bit of like lifetime deal sort of thing, and we were doing a little bit of direct sales. Now we've just gone to 2, ads and SEO. Simpler. It's not like we shouldn't be doing the other things, but right now we just want to do simple things and do it well. Right? So we took the 2 things that are performing really well and we're like, let's double down here. Speed is the greatest business strategy. Like I said, taking decisions is hard. Double down on your top talent. Prices law. There's a law called Prices law. In a company, 50% of the work is done by the square root of the number of people. If you have 100 people in a company, only 10 people do half the work. So double down on them. Give them the resources. Sit down with them. Give them the coaching, whatever is necessary. Make them win. Right? And alignment over agreement. Not everyone's going to agree. If you say, hey, let's do this, some people will be like, what the fuck? I signed up for something else. So get alignment. Tell them, I will try this first, then I will come. You don't have to have everyone to agree. Right? It's hard. Tighten up the value proposition to drive sales. Right? Figure out what is it exactly that customers are coming for and paying for. Do just that. Like with Avalon, if I were today, I wouldn't build the Metaverse channel. We have a channel called Metaverse channel. I wouldn't build it. Because that doesn't improve sales. It attracts, it's like a marketing pull. But it's not the thing that drives sales. We will focus more on the things that drive sales. For us, the things that drive sales are boring parts. Things like API, things like webhooks. Again, this is, if you're non-technical, this doesn't matter to you, but very important to us. Right? If it's not, it's fluff. If it's not one of these, it's fluff. Either drives revenue growth, saves money, reduces risk. Okay? Everything else is like useless. So, one more thing that they're talking about is push versus pull leadership, which means push means you're motivating people. You're like, karo yaar, kar sakte ho, tu karo yaar. And pull is, I'm going to do this, do you want to join me? Very different type of leadership. Awesome. Okay, so we're ending this now. I know it's been a lot of doom and gloom. So, far from it, we believe that the best, most ambitious, most determined of you will use this moment to rise to the occasion and build something truly remarkable. That was true for Cisco after the crash in 1987, Google and PayPal in 2000, Airbnb in 2008, DoorDash in 2020. But we also believe that winning in the years ahead is going to depend on making hard, decisive choices, confronting uncomfortable challenges that may have been masked during the exuberance and distortions of free capital over the last 2 years. One adjustment for everyone, including me, is when I raise money now, my expectations would have been like, 100 mil round next. Now I have to bring those expectations down, right? 100 mil valuation round. I have to bring those expectations down to whatever. Instead of 10x or 12x, I have to go down to 5.8x, right? I have to adjust in my head, probably even lower. But it is what it is, right? If I want to raise, I'll have to raise at the terms that the market gives me. Primary goal of this session was to shift our collective mindset. This is not free reign anymore. This is a crucible moment where you have to make decisions. Now, I want to show you one last thing. Gaurav Munjal said something. Yeah. So Gaurav, one of the investors in Avalon, put out an interesting note. Okay, I just want to read the note. Where is the note? Yeah. He sent an email called "Winter is Here." Winter is here. Very Game of Thrones like reference. Okay. We must change our ways. Tech stocks globally are crashing and burning due to tighter monetary policies and rising interest rates. We are looking at a time where funding will dry up for at least 12 to 18 months. Some people are predicting that this might last 24 months. We must adapt. Okay. They've laid off employees, and he says, this is a test for all of us. We must learn to work under constraints. We must focus on profitability at all costs. We must survive the winter. We have a different goal this time. The goal is profitability. The goal is to generate free cash flows. One good news is Avalon has free cash flows, and hopefully we keep it like that over the next few months. So Munjal suggested that Unacademy would significantly reduce its marketing budget and focus on organic growth channels. In his note, he asked employees to ensure that the company was profitable across every test prep category in the next 3 months. 3 months he's given them to be profitable, and that Unacademy centers were profitable in FY23. He added that business such as Relevel and Graphy, which are scaling up, should be mindful about their cash burn and reduce it significantly. In October 2021, Unacademy had allocated $20 million for Relevel to expand the online hiring platform's team and whatever, blah, blah, blah. Okay, all incentives to educators that are not linked to revenue have been completely removed or in the process of getting removed. Okay, if the current situation is as bad as the last 2 economic downturns, the best way to prepare is to cut costs and to extend your runway within the next 30 days. They're not even playing the 3-month game. They're like 30 days, we're either going to like kill or cut. Like we're either going to kick you out or become profitable. Okay, your goal should be default alive. When capital was free, the best performing, no, this is not what we want. He added one more thing, Gaurav. He said this, that Unacademy has always grown with capital. And let me just switch back to me. Yeah, Unacademy has always grown with capital. This is the first time in our history where we'll have to grow without capital, right? Where we'll have to be profitable and build something good. So it's exciting to see this happening to the industry. This is going to happen across, and it's exciting that we will get to watch all of this live. It will teach us so many things. Till now, all the kids in India were seeing a bull run on the stock market, thinking that geniuses. I remember there was one kid who commented on my video saying that one of my videos saying don't invest if you're young, saying that today kuch nahi pata hai, I made 10x on the stock market. Well, you're negative now. You should be in the negatives now, right? So that's the big problem, right? Like if you're investing, you have to invest for the long term. In the long term, no matter you go downs up, doesn't matter. In the long term, it goes up, right? And you need to have that mindset, right? You can't come with the mindset of a trader. So I just wanted to run you through the memo because I thought that you guys would learn a thing or two. It's great to see a sane ecosystem. Till now, I would say it's a little bit insane. All founders are feeling bad because their friends are raising so much more money without any real business. So it's nice to see that it's cooled down and it's become sane. For those that want to find the Avalon product, it's at buildonscenes.com. I think that we are in good times, right? Even though it looks insane, we are in good times. And hopefully, one of the things I wanted to do, which I can't do easily on this channel, because this channel is starting to get a little bit massy, is I can't speak directly to my older audience. Not older, but like the audience that really cares, right? There's an audience that comes here just for content, watches 1-2 videos about, how they're wasting their life on reels. But I loved the old audience who came in because they wanted to hear my thoughts, who wanted to hear breakdowns of this, even though this might not be exciting to everyone, right? The average person in India is like, who gives a shit if recession happens or inflation happens? So I want to have that maybe a deeper conversation with you guys. I'll find the right way to do it, the right channel to do it. Maybe, do a private community or something. But I want to do something exciting with you guys. I think it's about time. Being a B2B business, I barely get time to speak to you guys directly. So I'm glad this happened. I'll find a closer way to make it happen. All right. Thank you so much, guys. So one more thing, I think this PDF is like confidential. I know I did a live stream on it, but I don't know where the link is, and I don't want to be the person sharing the link. I just want to do a video on it, and hopefully I get the chance to speak to you guys directly. Yeah, for those that want to know what Avalon does in the product, go to buildonscenes.com. Let me just send you a link. Right, we're a B2B company. That's why you don't hear as much about us right now. Last year you heard a lot about us because we're B2C. B2B, our ads go to the US. One day I will find something consumer to do. I think one of the thing that irritates me is that I don't get time to like speak to you guys and do something for you guys, right? I love you guys, and I've always like, had a soft spot for my audience, the people that care, that stay till the end of a live stream like this one, right? And I am going to do something, maybe a private club, something like that, maybe something like the old Avalon server, but this time on scenes, maybe like a communication club. We have to have some activity. Most people don't know this, but the Avalon community first started on Telegram for all of us to learn a language called Esperanto. I can guarantee you none of us learned that language. Me neither. But it brought us together, and we did so much more together on it, right? Maybe this time I'll do something more mainstream, maybe a communications club or a way for people to learn English together or something like that. Something simple that brings us all together so that we become better together, and I have something to do with you. These days I feel like I don't have anything to do with you, so I'm going to work on that more soon. Awesome, guys. Love you all. Bye.